Hey, what's up, everybody out there? This is Ruben here from Tenacious Tribe once again. I got a new episode for all of you guys out there who are interested in what some of the more trending topics, trending assets right now are doing right now. What are the charts doing right now? And today, what I brought for you guys is no more, no less than Lithium, Global X Lithium and Battery Tech ETF, LIT. Now I've seen that lithium is a trending topic over the past week. A lot of people with their curiosities triggered as to what lithium might be doing over the upcoming months, whether if it's a good investment or not. As always, I'm here to dig into the technicals, to dig into the price section of lithium and trying to ascertain uh, what it is doing, what is the story that the charts are telling us. How can we get good hints on good information, good hints on where the price wants to go? What are some good risk to reward possible trading plans that we got here. So this is what I'm gonna be doing for this episode. Go through the lithium chart and trying to ascertain if we can establish here, or if we can determine here, if we can come up with some decent risk reward ratio. Optimize the trading plans for all traders out there and investors. So here we go, lithium. Yeah, first of all, why did I choose this ETF? I mean, I went through the futures options offered by TradingView and all that, and this was the most comprehensive chart with the more information, with the most information about lithium price action wise. So off we go. Where are we going to start? Why not starting by where we are right now, where we came from? What's the market structure we're dealing with? We know it's very ostensible when you first look at this chart that lithium has been on in an uptrend. Look at this from April, since mid 2020. For future reference, how can you identify an uptrend? Easy. Series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. If you got a trend line like this, it's very ostensible that you're in face of an uptrend. And even if you zoom out here, you see it as a break of structure, as a new high, new high, new high low, new high, new high low, and on and on. Some more into might be getting also. Look at the 10 EMA on a monthly time frame, which roughly equals to the 200 EMA in a daily time frame. Price is trading well above the 20 EMA, indicating me that most likely it's also trading above the 50 MA on the weekly, yes, for the bulk of the trend, except here. This is a good sign. This is a sign. This is an objective sign that the price is in a long-term uptrend. And your bias, by the way, your bias as a trader is in uptrends. You go with the trends. You buy. You don't unless, and I mean, I won't do it, but unless you really are a pro with a sound, back-tested trading plan, a lot of years, a lot of experience, then I'll be short in some particular cases in an uptrend like here. But I mean, the risk reward is more often than not terrible. Off we go to our analysis of lithium. Let's look at what else we got here. You see the second most sustainable thing you see when you look at this chart is that with this candle, which was concluded in January 2022, the uptrend came to an end. Perhaps even with this one already, which was not so ostensible. This one. Let me remove the drawings. Yeah, perhaps even this candle, but I mean it's not so ostensible. I would say this candle is this candle is obvious. The uptrend is done here. Boom, trend line broken below. If you for future references, if you also want to get like an objective answer as to whether the trend has come to an end or not, uh, we've established that the 200 EMA or the 10 EMA in the monthly time frame is a good benchmark for you to ascertain whether the trend is going up or down. It's uptrend or downtrend. If the price closes below the 200 EMA as it did in our monthly time frame back in January 22, then we objectively know that we no longer are in a long-term uptrend. Boom, that's it, easy peasy. Uptrend, not in an uptrend. So not in an uptrend. Where we are right now? Technical analysis books and say that after an uptrend comes a ranging market, a distribution market. Typically, what you got in a ranging market is price moving between support and resistance, something like this. Not saying this is what's going to happen. Sometimes you see price crashing also, but I mean the odds are before crashing, before getting back into a downtrend, or even resuming this uptrend, continue this uptrend, and then later reversing and getting back into a downtrend. First, we got this ranging market, which should depending on the price action we see within this ranging market, could be a distribution or a continuation pattern formed here for a breakout and a continuation of the uptrend as of this level, or breaking below this support area and starting a confirmed downtrend. So yeah, so the odds are we might be in a ranging market. This market might be distributing or accumulating. We don't know yet. I'm not too optimistic about the accumulation thesis. That's where we've been stepping from. Look here, this first base. This was an accumulation phase. A long term on a long term horizon. But we need to understand. I need to check what the price is telling us. Okay, so in a ranging market, okay, we got resistance, we got support. What else we got? Let's establish some value areas here. Let's see where. Let's confirm these support and resistance areas. One of my favorite tools to a certain what's a value area is the price volume analysis. It tells us where or which are the most congested areas with the most volume. See one here where the price is right now. You see another here. Bam, you can even like extend this one. We see another here. I would say the all-time highs are also always a zone or an area which we should have in mind. And this is interesting because you got a gigantic gargantuan uh, void space here with very few trading volume here. You know that price is attracted to volume. So if the price trades below this area here, then we got a very, very clean setup for a short trend. And a lot of meat, this whole space. Okay, and now we got the value zones as provided by our volume price analysis. What would be next? Zooming in, of course, checking where we are right now. Zooming in. It's very congested, this area. I don't really like it. It's very congested. A lot of obstacles all over the way. If you want to go, if you want to be bullish here, you got this from a place where you are right now. You got this obstacle. Then you got this obstacle. If you want to be bearish here, first you need to break out in this area, break down this area. Then you got this obstacle. I'd say the best scenario here would be to wait for the price to do something like this, and with very few meat, and then break below this congested area, because this we've seen already through our price volume analysis. This one is very meaty. Let's see if we find something else in a weekly time frame and trying to start sketching our trading plans. Okay, that's nice. Got a small or slight volatility contraction pattern. Wedge, symmetrical triangle, call it whatever you wish. But the point is the volatility has been contracting since March 2022. And we do know that markets, whichever markets they are, they tend to trade from volatility phases to less volatility phases. So since we're in a volatility phase here, or the more volatility phase here, now we are in a more contracted phase here. We know that a strong breakout from on either the upside or downside, could be a good sign that a good hint of the direction where the market wants to move. So what can I do as a trader? You can wait. You can wait for decisive breakout from these trend lines from this market, and then try to ascertain whether you are in a good risk reward zone. So let's say, for instance, we established that these zones are congested. Let's say one trading plan I'd be comfortable with be a breakout pump with a breakout from this breakdown from this from the symmetrical triangle, perhaps a retest, and then bum another breakdown below this area, and would enter here, somewhere around here, at the break and close of the price here. We always need a trigger, always, 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 always. We know that this is a congested zone. We know that a lot of buyers here, that if the price gets back here, they're gonna buy. That if the price gets below here, they're gonna be start like seeing red in their P&Ls, and they might have. But yeah, when their heart starts racing and when the push comes to shove, so to say, when things get real, they might get fearful and when they see the price right here, they might have the impulse to keep on selling, of course, um, which would be a good reason for us to sell as well, to go short in this case. And this means that this area could also work as a resistance area, because if the price gets back to this area, and if these traders had not sold before, they're going to be craving to sell once again when price gets back to this area. If they sell, we got resistance, so yeah, we're covered. And but if the price goes above this area, then we know that our trading idea has most likely failed. So it's a good zone where to buy, and also a good zone where your entry and your risk would be asymmetrical in relation to the reward you could get if the price gets back here, which are the odds, as we have ascertained via our volume price analysis. So I mean, I would run through other scenarios, of course, if you're like a day trader, or if you're trading a daily time frame. I prefer the longer time frames for reasons already provided in these episodes. I mean, if you're a daily time frame trader, something like this could also be. I don't know what's the risk reward ratio of this trade. Let's see. Huh? Very poor, I think. Nah, yeah, very poor. One to 1.13. Let's ascertain what's the risk to reward ratio of our Paris trade here, where you got this meaty area here, like to take our profits from. Oh yeah, it was here. And stop loss above this area and take profit here. Now look, 2.5, bomb. That says it all. For those new to trading, I mean, I'm not saying by no means whatsoever that this is what the market is gonna do. Good trading is not about predicting. No, nobody can. Not even Bill Ackman, Warren Buffett, Charlie Munger, Monish Pabrai, George Soros, or none of these guys can predict what the market is about to do. I'm not a fundamental analysis, so I'll not equivalent this by no means at all. Analysis to what Buffett Munger does, perhaps something more ethereal as what Soros does. But I mean, none of these guys ever try to predict what the market is doing. They are just trying to find situations or circumstances where the planets are aligned to provide them with good odds of getting good returns in the future or an FT dividend. And all I'm saying with this analysis is as per sound technical analysis principles, and risk to reward trading risk management principles, which all of which should command if you want to step into a trade. All I'm saying is that this is the only like remotely interesting trading scenario. If the price did something like this, bomb, indicating new direction, and with a breakdown below this symmetrical triangle, perhaps retesting, getting back here, and bum, going below this congested area. Uh, and trading, of course, below the 10 EMA on the weekly time frame, which would be the 50 on the daily time frame. I would not get too much interested in these ones. And I mean, these are possibilities. Don't get me wrong. Of course, we saw that there's a RSI divergence here. There are good probabilities for this market to resume the uptrend or to keep on accumulating here and do something like this. uh, Do something like this. There are good odds of this scenario to happen. Don't get me wrong, there are. I'm just saying that these scenarios do not offer good risk to reward trades. So yeah, as a trader, you don't want to be risking $1 to get $1. You want to be risking $1 to get at least 1.5. Ideally two, at least. So I'm just saying that under this in this chart, this is the best trade I can find here in case the price goes this way. So in short, in case the price does this might be a good trade. No financial advice at all whatsoever. Be diligent. Run your analysis, run your numbers, manage your risk. Ideally, speak with your financial advisor. But yeah, as per my experience, this should be a nice risk reward scenario. And if the price does not behave like this, I would say the best thing to do for a trader trading in a weekly time frame, monthly time frame, with biases and ways of viewing the market and risk tolerances concomitant with this approach. I would advise them if the price goes this way, just look for something else to trade, something which could offer you a better risk to reward scenario. Yeah, and that's it, guys. That's what I got for you guys today. No financial advice once again. I'm just giving you perspective. One good way of using this sort of analysis for you is use it as a complementary analysis to what you're doing. If you're trading already, if you're investing, and perhaps you're looking at this market and you're just seeing a bullish scenario. Maybe this analysis is good and it could offer you value by offering a divergent perspective from the one you have right now, and perhaps helping you considering more risks than the ones you have under your radar right now, and make a more informed decision and take a better trade or risk manage better. And hope I succeeded in that mission. Hope you guys have enjoyed what I've brought to you guys today. Remember, always manage risk, manage risk, manage risk. It's the most important thing if you want to be a good trader. Manage risk, manage risk, manage risk, and in the end, it should be fine. If of course you have an edge, you have the numbers run, but if you manage risk, you're halfway there, halfway there. And that's it. Hope you guys enjoyed. If you did, then yeah, of course, push the like button. I mean, I don't really care, to be honest. Just interact with me if you gotta. I love talking about trading. Interact with me if you guys want to add something to my analysis. Feel free. I love speaking and discussing technical analysis, stocks, all kinds of assets whatsoever. Interact, comment, add something, share, get in touch, and that's it. Take care, guys. It was nice having you guys around. Cheers.